In a world where cryptocurrencies are becoming an increasingly integral part of the financial landscape, recent developments have sent ripples through the market, particularly concerning the volatile realm of memecoins. Elon Musk, the billionaire entrepreneur and self-proclaimed champion of Dogecoin, has issued a stark warning to investors regarding their speculative tendencies in this burgeoning sector. In a candid interview with comedian Joe Ro, Musk described investing in memecoins as akin to gambling in a casino, stating, "If you expect to win at the casino, you're being a fool." His admonition comes at a time when the memecoin market is experiencing significant turbulence, raising concerns about its potential impact on the broader cryptocurrency ecosystem, particularly Bitcoin. The backdrop to Musk's warning is the much-discussed memecoin market, which peaked at a staggering $137 billion in market capitalization last December, only to face a sharp decline as investor sentiment soured. Memecoins like Dogecoin, which saw its market cap soar during the pandemic, have been particularly affected. Although Dogecoin has managed to retain around $30 billion of its value, it has not escaped the fallout from the current memecoin crash, which some analysts warn could signal a deeper correction for Bitcoin, the flagship cryptocurrency. Musk's comments reflect a growing skepticism about the sustainability of wealth generated through such speculative assets, particularly as the market grapples with the reality of insider trading and speculative frenzies that have often left retail investors exposed to heavy losses. Amid this atmosphere of uncertainty, the cryptocurrency market is also closely watching the potential approval of new spot ETFs. Following the successful launches of Bitcoin and Ethereum, ETFs' attention has turned to other cryptocurrencies, notably XRP, Solana, and Litecoin. XRP, currently embroiled in a protracted legal battle with the SEC regarding its status as a security, is seen as a top candidate with a 65% chance of ETF approval this year, according to Bloomberg. A successful ETF launch could unlock billions in new investments, with projections suggesting that an XRP ETF could attract as much as $8 billion. Solana, once a darling of the DeFi space, has faced its own challenges amid the memecoin debacle, which has raised questions about its regulatory standing. Despite this turmoil, Bloomberg estimates a 70% chance for a Solana ETF potentially drawing $6 billion in new capital. In contrast, Litecoin appears to be the safest bet for ETF approval, with a 90% likelihood attributed to its classification as a commodity free from the regulatory turmoil that has plagued its counterparts. As the cryptocurrency landscape continues to evolve, the implications of these developments are profound. The potential approval of new ETFs could usher in a new era of institutional investment and liquidity, legitimizing the cryptocurrency market further. However, the cautious sentiment surrounding memecoins and the speculative nature of the current market underscores the need for investors to approach these assets with a discerning eye. The ongoing investigations into the Biden administration's alleged efforts to debank cryptocurrency firms further complicate the landscape. The House Oversight Committee's inquiry into the FDIC's past practices raises critical questions about the regulatory environment for crypto businesses, particularly in light of recent admissions by Federal Reserve Chair Jerome Powell regarding the reality of crypto debanking. As the crypto market navigates these turbulent waters, the intersection of speculation, regulatory scrutiny, and institutional interest will undoubtedly shape its trajectory. The coming months will be pivotal, as investors and regulators alike seek to find a balance between innovation and oversight in this dynamic financial frontier. In the ever-fluctuating world of cryptocurrency, recent developments have sparked significant concern among investors, particularly as the memecoin market faces a drastic downturn that could impact Bitcoin's stability. Elon Musk, a vocal advocate for digital currencies, has issued a stark warning regarding the dangers of investing in memecoins, suggesting that those who expect to profit from this volatile sector are being foolish. His comments come at a time when the broader cryptocurrency market is grappling with uncertainty amid macroeconomic pressures and changing political landscapes. The recent decline in Bitcoin, the leading cryptocurrency, has been alarming. After a surge following the U.S. presidential election in November, prices have plunged significantly, illustrating the market's volatility. Bitcoin has fallen by over 21% from its peak on January 20th. Driven down by fears of U.S. tariffs harming the global economy alongside a retreat in speculative interest. Analysts caution that this downturn may not be over, with some predicting further declines as fear and uncertainty reign. In a recent interview, Musk compared investing in memecoins to gambling at a casino, underscoring the risks associated with such speculative investments. "If you expect to win at the casino, you're being a fool," he remarked, emphasizing that investors should be wary of placing their life savings into unpredictable assets like Dogecoin and its contemporaries. Although Dogecoin, which Musk has famously championed, has seen a resurgence from its low points, currently holding a market cap of around $30 billion, it is emblematic of the broader memecoin frenzy that has captivated retail investors. The memecoin market peaked at a staggering $137 billion in December, driven by a wave of enthusiasm and notable endorsements, including a Trump-themed memecoin that initially soared before crashing dramatically. The hype surrounding these coins has led to significant losses for many investors as the realization of the speculative nature of these assets sets in. "We've been hypnotized by price spikes, memecoin frenzies, and media spectacles," noted Dom Hars, co-founder of Build on Bitcoin, reflecting the broader sentiment within the community. In tandem with the memecoin crash, institutional interest in Bitcoin is beginning to shift. While the market has faced headwinds, including an increase in interest rates and trade war threats, there are signs that large investors are slowly increasing their exposure to Bitcoin through new avenues like spot Bitcoin ETFs. The recent tripling of institutional investment in Bitcoin to $38.7 billion indicates a potential shift towards a more stable investment landscape. Cathie Wood of ARK Invest remains optimistic about Bitcoin's long-term prospects, projecting that it could reach prices as high as $1.5 million by 2030. She argues that the current market conditions, while turbulent, are necessary for the transition from short-term speculative trading to a more stable long-term investment strategy. "We would not want the market to continue straight up to the right without looking back. We want a wall of worry," she stated, emphasizing the importance of building a solid foundation for future growth. Looking ahead, the cryptocurrency market is poised for potential catalysts that could reignite interest and investment. Analysts are particularly focused on the prospect of a U.S. government initiative to establish a strategic Bitcoin reserve, which could involve purchasing up to 1 million Bitcoins over the next 5 years. Such a move could not only stabilize the market but also encourage other nations to follow suit, leading to a renewed bullish sentiment. As the cryptocurrency landscape continues to evolve, investors are advised to approach with caution, especially in light of the recent volatility. While short-term fluctuations can be disheartening, the long-term outlook for Bitcoin remains promising, bolstered by increasing institutional interest and potential government initiatives. As the market recalibrates, it will be essential for investors to remain informed and adaptable to the changing dynamics at play. As the cryptocurrency market navigates turbulent waters, it finds itself grappling with the fallout from the recent decline in values, a situation exacerbated by the fading excitement surrounding Donald Trump's election and his promised pro-crypto policies. In an industry that thrives on speculation and hype, the past few weeks have seen some of the most significant cryptocurrencies, including Bitcoin and Ethereum, plummet in value, leading analysts to re-evaluate future market trajectories. Bitcoin, the largest cryptocurrency by market capitalization, has seen a dramatic 21% drop since peaking on January 20, shortly before Trump's inauguration. The cryptocurrency is now trading at levels reminiscent of the aftermath of Trump's election victory, driven down by a combination of factors including rising interest rates and economic uncertainty stemming from potential trade conflicts. Other cryptocurrencies have fared even worse. Ethereum has lost over 40% of its value since December, while the so-called Trump memecoin has plummeted by an astonishing 80% from its January peak, according to CoinMarketCap data. Market analysts attribute the current downturn to a broader shift in sentiment within the financial world. "The market is disappointed," noted James Butterfield, head of research at CoinShares. reflecting the collective frustration of investors who had initially celebrated Trump's ascent as a potential boon for digital currencies. Trump's campaign promises of creating a national Bitcoin reserve and establishing a clear regulatory framework have yet to materialize, leaving many in the crypto community disillusioned. Compounding these issues, the U.S. Federal Reserve's continued hawkish monetary policy has made speculative investments less attractive. The announcement of tariffs under Trump's administration has further fueled this trend as investors retreat from riskier assets. As a result, nearly $1 trillion in nominal value has been wiped from the global crypto market, bringing its total market capitalization down to approximately $2.76 trillion. Existing regulatory uncertainty has also dampened enthusiasm. Although the Securities and Exchange Commission (SEC) has recently withdrawn investigations into several cryptocurrency firms and dismissed a lawsuit against Coinbase, these actions have not significantly bolstered prices. Gabe Selby, head of research at CF Benchmarks, observed, "The initial excitement surrounding the Trump administration's perceived pro-crypto stance appears to be in a phase of recalibration." He emphasized that a clearer regulatory framework or significant catalysts such as new exchange-traded fund ETF approvals are necessary for sentiment to shift positively. Despite these setbacks, some analysts maintain a bullish outlook. Standard Chartered's Jeff Kendrick holds a target price of $500,000 for Bitcoin before Trump's term ends, driven by the belief that new investors will eventually enter the market. Recent filings indicate that sovereign wealth funds and banks are increasing their stakes in cryptocurrencies, suggesting that institutional interest remains robust. The recent launch of new meme coins associated with Trump, specifically the official Trump and Melania meme tokens, initially created a stir but quickly turned sour. Within hours of their launch, the value of these tokens plummeted by over 50%. Reflecting the volatility that characterizes the meme coin sector and raising questions about the sustainability of such speculative ventures. As the excitement fades, platforms like Pump.Fun, which facilitated the launch of these coins, are witnessing a decline in revenue, illustrating the fickle nature of the meme coin market. As the cryptocurrency landscape continues to shift, investors are left in limbo, awaiting clearer signals from the Trump administration and a return to more favorable market conditions. With nearly $1 trillion evaporated from the crypto market and the SEC's regulatory framework still in flux, the road ahead appears complex and uncertain. However, as history has shown, the crypto market is notoriously resilient, and many are eager to see how it will adapt to these challenges in the coming months. Ethereum is at a pivotal moment as it prepares for the highly anticipated Pectra upgrade scheduled for March 5, 2025. This upgrade is expected to play a crucial role in reshaping the Ethereum ecosystem and could lay the groundwork for the next significant market rally. Analysts are optimistic that the changes will alleviate the selling pressure on Ether ETH, which has recently experienced a downturn, dropping over 32% in February alone. The price of Ether fell to a two-month low of $2,073 before rebounding to approximately $2,245. The ramifications of the Pectra upgrade are multifaceted. Gabriel Holm, a research analyst at blockchain intelligence firm Into the Block, stated, "While Ethereum's upcoming Pectra upgrade won't necessarily trigger an instant price bump, it marks a significant step forward in the ongoing improvements to the Ethereum ecosystem." The upgrade aims to reduce consensus overhead and enhance Layer 2 scalability, ultimately expanding the network's capacity and solidifying its competitive advantage in the crypto landscape. One notable feature of the Pectra upgrade is the Ethereum Improvement Proposal EIP 7251, which increases the validator staking limit from 32 ETH to 2048 ETH. This change is designed to facilitate easier compounding of earnings for validators, potentially mitigating sell pressure in the long run. Meanwhile, traders are looking to historical price fractals for insight into potential market movements, with some suggesting that Ether's recent correction could be setting the stage for a significant rally akin to patterns observed in previous market cycles. The Ethereum Foundation's announcement of a new leadership structure comes at a crucial time as well. Xiaowei Wang and Tomasz Stanchak have been appointed as co-directors, set to take office on March 17. This strategic shift aims to restore confidence in Ethereum's direction amidst criticism that the network has been losing its way. The leadership change reflects an effort to address concerns that Layer 2 solutions are overshadowing the mainnet and that Ethereum is facing increasing competition from high-throughput chains. Vitalik Buterin, Ethereum's co-founder, laid out a strategy earlier this year to bolster the network's resilience. This strategy includes increasing transaction capacity and encouraging Layer 2 solutions to contribute a portion of their fees back to the base layer. The timing of these changes is critical as Ethereum navigates the complexities of maintaining its position in a rapidly evolving market. As the crypto ecosystem faces additional challenges, including the recent crash of various memecoins, which has raised concerns about overall market stability. Ethereum's forthcoming upgrade and leadership adjustments could be pivotal in shaping investor sentiment. Elon Musk, a prominent figure in the crypto space, has recently cautioned against speculative investments in memecoins, emphasizing the need for a more grounded approach to cryptocurrency investment. In conclusion, as Ethereum gears up for the Pectra upgrade and embraces new leadership, the potential for a market rally may hinge not only on technical adjustments but also on restoring investor confidence and addressing the broader challenges facing the crypto ecosystem. The coming weeks will be crucial for Ethereum as it seeks to solidify its position and innovate within an increasingly competitive landscape. As the developments unfold, all eyes will be on Ethereum to see how it responds to both internal changes and external pressures in the dynamic world of cryptocurrency. The cryptocurrency landscape is experiencing notable turbulence, particularly for Solana SOL, which has seen its price plummet by over 45% since the launch of the official Trump memecoin on January 18, 2025. As of March 2, SOL is trading at approximately $143, down from its peak of over $261. Industry experts suggest that the burgeoning popularity of memecoins is siphoning liquidity away from more established cryptocurrencies like Solana, complicating recovery efforts. Dan Hughes, the founder of the decentralized finance platform Radix, elaborated on this phenomenon, stating, "Memecoins don't tend to draw on much external capital flow. Instead, existing ecosystem capital round robins from one meme to the next." This shift in liquidity dynamics has been particularly stark as investors rush to buy into trending tokens fueled by FOMO, fear of missing out. Hughes noted that in the days following the Trump token's launch, everything was red except Trump and Solana, playfully dubbing it the liquidity vampire. Despite a significant influx of liquidity, over $8.75 billion worth of USDC minted by Circle since the beginning of the year, Solana's price has continued to decline, underscoring the impact of the memecoin craze. Even a recent $2 billion token unlock, which introduced over 11.2 million SOL tokens into circulation, failed to buoy the asset's price. Market analysts had expressed concerns that many of these tokens were acquired at a much lower price during FTX's auctions, particularly by firms such as Galaxy Digital and Pantera Capital. External macroeconomic factors and a series of recent security breaches have further dampened investor sentiment. Hughes pointed out that institutional investors are more cautious than ever, influenced by a wider range of global events and the lingering repercussions of hacks such as the $1.4 billion incident at Bybit, the largest in crypto history. It will take some time for the remaining dust to settle and the mojo to come back, Hughes remarked, reflecting the broader uncertainty in the market. In contrast to Solana's struggles, other cryptocurrencies are attempting to carve out their niches. Cardano ADA, for instance, continues to show resilience, buoyed by its focus on long-term development and practical applications. Analysts are speculating whether Solana can regain its former glory and reach the $180 mark again by the end of 2025, especially considering improvements in scalability and transaction speed. Meanwhile, new contenders like Remitix RTX are emerging, aiming to disrupt the PayFi sector with innovative solutions for cross-border transactions. With over $13.2 million raised during its pre-sale, Memecoin showcases potential for significant growth in a market hungry for practical applications. Solana's creator Anatoly Yakovenko has also made waves with his controversial views on Bitcoin. He posited that Bitcoin holds no intrinsic value and should be regarded merely as an insurance policy against the collapse of superpowers. If it works, it's because safety and property rights have intrinsic value, Yakovenko explained, emphasizing the importance of diversifying investments rather than going all in on Bitcoin. As the cryptocurrency sector continues to evolve, the interplay between established players like Solana and emerging projects will be critical to watch. The current climate suggests that while Solana is navigating turbulent waters, its future will depend on its ability to adapt to changing market dynamics and investor preferences. As new and innovative projects gain traction, the landscape may shift dramatically in the months to come, making it essential for investors to stay informed and agile.